Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 dividend stocks that score a 10 out of 10. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at 3 dividend paying stocks that all have a strong buy rating from analysts and score a 10 out of 10 on the TipRanks Smart Score. Now that is a unique score based on 8 different factors that measures a stock's likelihood to outperform the market. We found today's stocks using the Best Dividend Stocks feature on the TipRanks website. That can be found under Research Tools and Dividend Investing. Here we'll get our list. Now I'm going to sort it to medium and mega market caps as I prefer those for my dividend stocks, and you can sort by different metrics such as analyst consensus, market cap, or dividend yield. So we're going to take a look at some of those higher dividend yields on the list and focus in on companies with strong buy ratings. First up, let's take a look at Atmos Energy. Their stock trades under the ticker ATO, currently priced at $112 per share and a market cap of over $16 billion. Now, they are fairly flat this past year as they did take a big dip here but have been gaining back since, and they are up 9% over the last 6 months. Atmos Energy engages in natural gas distribution and pipeline and storage businesses. They are the country's largest natural gas-only distributor and safely deliver reliable, affordable, efficient, and abundant natural gas to more than 3 million distribution customers in over 1,400 communities across 8 states located primarily in the South. They are the largest gas distributor in the states of Texas, Louisiana, and Mississippi. In fiscal 2022, their earnings per share increased for the 20th consecutive year, and they also increased their dividend for the 38th consecutive year. They pay a quarterly dividend of 74 cents per share for a current dividend yield of 2.44%. Now, their last ex-dividend date was in February, so we should have the next one coming up soon. We can expect them to declare that next dividend right around their next earnings date, which is coming up on May 3rd. Analysts will be anticipating earnings per share of $2.45, which would be an increase over the previous year. Taking a look at the Atmos Energy Smart Score, that 10 out of 10 score comes from positive trends across the board. We have bullish blogger and news sentiment, an increase in hedge funds holdings, and an uptick in crowd wisdom. There are currently 5 Wall Street analysts with a rating on the ATO stock, coming in overall as a strong buy. That is based on 4 buy ratings and 1 hold, and an average price target comes in at $127, which would be upside potential of 13% for this next year. Looking at our detailed list, the most recent rating came in 7 days ago from Morgan Stanley with an upside of over 13%. A couple months ago, we do have that hold, but it does have an upside of 10%, and they did increase their price target. Next up, we have the Reinsurance Group. With a market cap of over $9 billion, their stock trades under the ticker RGA, currently priced at $138 per share. They are up 30% over the past year, but have cooled off in recent months, down 7%. Reinsurance Group of America is one of the largest global life and health reinsurance companies. And what is reinsurance, you might ask? Well, simply put, reinsurance is insurance for insurance companies. This is where an insurer transfers all or part of a risk to another insurer to provide protection against the risk of the first insurance. RGA is one of the only global reinsurance companies to focus primarily on life and health-related reinsurance solutions. They have life reinsurance in force of $3.4 trillion and consolidated net premiums of $13.1 billion. RGA has been paying out a dividend since 1993. That dividend is paid out quarterly and is 80 cents per share for a dividend yield of 2.22%. Now, once again, we have a company that paid out back in February, so that next dividend should be declared pretty soon, probably in line with their earnings report on May 4th. Analysts are anticipating earnings per share of $3.37, which is a big increase from last year. Taking a look at their Smart Score, once again we have bullish blogger and news sentiment, plus positive technicals. We've also had a big increase, 9% increase in the crowd wisdom over the last month. The RGA stock currently has 8 analyst ratings and has been picking up attention as we get closer to that next earnings report. Taking a look at recent news, we do have one analyst at Barclays increasing the price target, while RBC did lower. We then had Wells Fargo initiate a new buy rating. Overall, we have 6 buys and 2 holds, with an average price target of $158, which would be an upside of 14.5%. We can see those recent ratings here, all ranging from a hold with an upside of 5% to a buy on a high end of almost 20%. And our third 10 out of 10 dividend stock is Baker Hughes. Trading under the ticker BKR, their stock is currently priced at $28 per share. They have a market cap of over $29 billion. Now, they are down nearly 6% over the last year, but have seen some gains over the last 6 months. Baker Hughes is an energy technology company. They develop and deploy the most advanced technologies to serve energy and industrial companies looking for more efficient, more reliable, and cleaner solutions. The company operates through 4 segments: oilfield services, oilfield equipment, turbo machinery and process solutions, and digital solutions. They have been paying out their dividend since 1989, so 34 years. It is a quarterly dividend of 19 cents per share for a dividend yield of 2.45%. And yes, once again, they paid out back in February, so that next one will be coming up soon. They just reported their latest quarterly results on April 19th, and their revenue of $5.7 billion grew 18% year over year. And earnings per share of 28 cents came in 2 cents ahead of analyst expectations. Their 10 out of 10 Smart Score comes with a big increase from hedge funds as well, with 6.7 million shares being added by hedge funds in the last quarter. Looking at recent news, following that earnings report, we have several analysts that are raising price targets as well. Altogether, the Baker Hughes stock comes in as a strong buy based on 14 analyst ratings. There are 12 buy ratings and 2 holds, and an average price target of over $37, which would be an upside of over 30%. Taking a look at a lot of those ratings from the last week, we have plenty that are above that 30% upside. On the low end, we do have a recent hold with an upside of about 8%, and our high-end price target comes in with an upside of nearly 50%. So that is our quick overview of 3 dividend-paying stocks, all scoring a 10 out of 10 on the TipRanks Smart Score and coming in with a strong buy consensus from analysts, all with double-digit upside potential. Let me know your thoughts in the comments down below, what you think of these 3 companies and what other dividend stocks that you love. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence and sticking to your own investment plan. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.